Tuesday, April 11th, Stan Ehrlich market analysis, starting out with stock market indexes and my favorite, the SPY, Spider, which of course is the E-mini and the micro E-mini with minor differences because the trading hours are different, and that can cause different signals. Now, the market's waiting for tomorrow's important economic numbers, quote unquote inflationary guideline type numbers, CPI, core CPI, etc. And that's why we're going basically sideways, at least the excuse of going basically sideways for the last few days. Markets move on anticipation and reverse on realization. So we are already up in the last couple of weeks. That's expecting numbers to be improving. If they are as expected without any significant variation, then probably that is built into the market and we're going to have the correction I'm expecting. And that's my interpretation of the fundamentals. Fundamentals, which I'm not good at interpreting technically. We're up against resistance. We got overbought. We have a bearish engulfing at the beginning of last week. And the market so far for the Spider has not violated any bearish expectation rules. And that would be getting above 412, especially if it stayed there. Now, you might get above 412 and all of a sudden break down real quick because you're banging your head against the ceiling or a resistance area. We'll see what happens, that's for sure, in the next few days. I am expecting the market to come down approximately 12 points or so to close a gap, 13 maybe points, and that would be down to about 396.5 from about a week and a half ago when it gapped up. If we can get back down there, I think we're going to be in a really good spot to be a buyer. In the meantime, this bull market, and that's my opinion, we have a bull market for the year of 2023, probably going to get into 2024 in progress. So if we don't get down to close the gap, I still am expecting new highs on a closing basis, new highs for the whole darn trend above the highs that we had on February 2nd, which were approximately 418.5. And that is only 8 points above where we are. So it's easier, and it's less of a point move to get to new high ground for many months, going all the way back to, what would that be? August 26th. So we're talking about September, October, November, December, January, February, March, April. We're talking about 8 months, over half a year, easily. Profound continuation of the long-term bull market. And it's only 8 points away. But first, I'd like to see that dip down to close the gap and then go back up again, which would be very typical of the current technical situation that we have. Let's look at the DIA, which is a little bit different story this morning. It has made minor new highs now on the DIA for the last month or so. It's the highest price since February 17th. Yeah, almost 2 months. That's nice, but it is overbought today. And it's making minor new highs and up against the bear trend line. It's not a super great one. That's across the top of the market in December. So, 3-month bear trend line is not to be ignored. But this would be the first test of that bear trend line if we can get there in the first place. And I'm not so sure we can quite touch it. I am expecting this to turn down. So we have overbought conditions and we have a very tiny, you can't see it, I think it's a 5.05, a nickel gap between today's low and yesterday's high at the moment. Again, I'm making this YouTube recording at 10:22 a.m. California time. So we have 2.5 hours before the market closes. Plenty of time to go up and down a chunk. So we'll see what happens here. And tomorrow morning before the opening, those fundamental pieces of information are going to be coming out. So watch the E-mini or micro-mini or those futures market indexes that are open that early. Now the QQQ is interestingly significantly different this morning. We didn't even get above yesterday's high. We are in the middle of yesterday's range on a dip down of a whopping 1.7 points, which is not a large amount at all. Very small. So everything is slightly higher, not even a point on the S&P, a little higher than a point on the DIA, a 1.75 lower in the Qs. Whoopee. Nothing is doing anything super special so far. At the end of the day, things could fall apart. And if they close lower, I think that's an indication I'm going to get my expectation. Plus, on the DIA, on the QQQ that you're looking at right now, there is also a gap below the market to close. So everybody's got a reason, Spider, DIA, QQQ, to come down and close the gap somewhat. I am going to mention the 2000, Russell 2000 this morning, because every once in a while there's something to say here that I think is profound. The price levels at which since last May, we're looking at almost a full year ago, the market came down to about 170 and bottomed out. Then a month or so later, it came down to close to 160, bottomed out, did it again in September, came down to 170 in December, and now last month came down to 170 again. So obviously 160 to 170 represents a gigantic, major, on a scale of 1 to 10, that's a 9 support area. Doesn't mean it can't get broken, but it is likely not to get broken. So we're starting to move up a little here from that support area. Now, if we do get a gap closure in the other indexes, I would expect this to challenge the lows of the last week and a half, dip down in the low 70s, 72, 71 maybe, and then with the other indexes turn back up. Okay, futures. We have the E-mini, the first chart this morning. Gigantic support area. It's the same for the Spider. We are up a little on the day, slightly higher than the last day or two or 3 or 4. And the bearish engulfing that we had at the beginning of last week still stands because we haven't gotten above the high of that bearish engulfing, just like the Spider, SPY. So I'm looking for a correction because this is open close to 24 hours a day. There is no gap to close here, and it doesn't gap up or down very often. So gaps are somewhat rare on the micro and the E-mini. Next chart. We're looking at the interest rate futures. Remember, I've talked about the major resistance area and drew that red bar in a long time ago. A month or so ago, it came up to it and stopped and pulled back. Not very far. It did it again, but this time it made slight dent in the new high ground zone and actually got above the resistance, but it closed poorly and it was overbought that day, and that was just last week. And we've been pulling back down since, every day since. So that would be Friday and then Monday and today, Tuesday. On the 10-year notes, it's almost exactly the same thing. It didn't quite make a new high for the whole last several months. Very, very close. And it almost got overbought, but not quite. The RSI indicator in the subgraph is my custom version of Wells Wilder's RSI. And I learned RSI from Wells himself. So I like it, and I've been using it for, I don't know, 40, 45 years. Now, interest rate futures could come down a little bit more. I think it's quite possible, but in both cases, bonds and 10-year notes, I am expecting this to be a long-term bullish formation of some sort, a bottom of some sort, and the beginning of a long-term bull market that very possibly started last October when the stock market turned around as well, which was October 13th, an ER green daily buy signal, a whopper. And I said so on the day it occurred and alluded to it before it happened. Next chart. Crude. Overbought. We do have a bullish engulfing today. It's not an ER buy signal. And I don't like the location it's happening in. Right up against resistance. A day after a bearish engulfing yesterday, but that didn't work. So there was a small loss on that particular signal, period. And I mentioned that signal was not really a legitimate one. TradeStation thinks that the previous bar, which is an open high-low close at the same tick on Good Friday, was a regular trading day that just didn't have any range. So it says an outside down day after being overbought is a bearish engulfing, and it's not really quite true. Plus, we didn't get below Thursday's low, which was extremely important, and that low was 79.65. Monday, we had a low of 79. Well, yeah, it did actually. I am apologizing. The low on Friday was 79.65. The low yesterday was 79.61. That's a legitimate bearish engulfing, and it just didn't work. Okay, that's crude oil. What about, and I'm looking at the resistance going back to crude as still stopping this rally. It's overbought. That's my main reason. Significant resistance area, long term. We're in a long-term bear market. I think we're about to turn back down, and there's that big gap. Next chart. Heating oil. Same kind of comments. I don't have that much to go on in this particular chart. I do want to point out that we did pick some extremely important reversals. The top of the market, January 24th. Almost the top of the market on November 8th. The top of the market to the exact day on June 17th of 22. There's some whoppers for you. Next chart. Natural gas. We're still staying below this little blue line, which is the previous support line. A couple of weeks ago, we dropped below it, and I talked about it starting to trend lower, which I still think is going to happen. Right now, we're toying with this resistance, trying to get above it. Doesn't look like it's having very much success, but it's pretty quiet. The major factor here is the trend is down, and I'm looking for that to continue. Next chart. Gold, silver, and platinum. All three of these, the ER automated 100% in and out trading system picked the lows to the exact day. So on February 28th, green bullish engulfing ER buy signal. I'm still looking for higher levels. Next, on March 10th, the bottom of the silver market to the exact day. We're having a little trouble up here. Looks like we're developing a new resistance area. We're overbought. The bearish signal yesterday is not legitimate. We didn't get below Thursday's low. Friday is bogus because it has an open high-low close of one tick. It was a ceremonial opening and closing, so to speak, on Friday, Good Friday. So that actually shouldn't be there if you ask me. And therefore the red bearish engulfing wouldn't be there. So now what's important is the fact that it's yellow, overbought, and having a lot of trouble at 25.25. I think it's about to turn back down. Next, platinum. We got the bottom of the market, February 27th to the exact day, and we've recently been making new highs. The trend is a little ambiguous. It depends upon when you start measuring the trend. If you did, then we pick the top of the bull market and the beginning of the bear on January 11th, and we pick the bottom of the market on February 24th to the exact day in both cases. And some really good sell signals in the past. In particular, the one that stands out was September 9th of 22. Next chart. So I'm neutral at the moment. We've had a decent move up. We came close to being overbought. I don't have any other signals per se to point out. and they're not overbought. So neutral. Next, high grade, neutral. Next, soybeans, corn, wheat, bean oil, bean meal. We had a bullish engulfing a few days ago that's just not panning out very well so far. We came down into the buy area and then going sideways. So I'm looking for a rally, but I ain't getting it yet. Next chart, bean oil gave us a buy signal also, came down close to canceling the signal out, but didn't do it, and is trying to work its way up some, not very impressive so far, looking for a rally. Next, soybean meal. Had a buy signal that didn't work, small losses, and neutral for the moment. But the longer term trend is up. The trend is your friend. Next chart, corn. We had a sell signal a few days ago. We have a minor new high for a couple of days today, but it doesn't cancel out the sell signal so far. I'm expecting it to make new lows for a week or two very quickly here, before the end of the week at least. Maybe tomorrow, next day. Next chart. Wheat, major resistance area. We tested a couple of weeks ago very accurately, pulled down again. Now, we did have a buy signal that lasted a few days. These green and red bullish and bearish ER buy and sell signals, I do not want to give you the impression that they are always the top of the bull market to the day and the bottom of the bear market today, but they sometimes are. And that's why I developed those signals. Often, they are the beginning of short-term small rallies or breaks, dips, that last a few days to maybe a few weeks, and maybe say a month, but not necessarily the whopping big turning point for many months to come. But again, they certainly do point out in retrospect, 2020 hindsight, that that signal occurred at the bottom, and I'm going to use October 13th again for the most recent whopping bullish buy signal, which I saw coming, scream bloody murder on the day it happened. Go listen to my YouTube October 13th. Next chart, live cattle. Well, pick the bottom day on this one almost, and the beginning, certainly, of the rally, which is rather phenomenal. The sell signal didn't work, and I've been explaining to people, if you are already long from a previous buy signal and you're not stopped out yet, a sell signal does not get us out of the long position and go short. We need to be flat in order to go short from a new short sell signal. And in this case, we were still long because this dip wasn't anywhere near sharp enough to get us out of this trending trade. So we're still long. The problem right now is that we're overbought. So I am expecting a minor downside reaction in this bull trend, and it's a heck of a bull trend. Looking awful good. Next chart. Bull signal, which was bogus yesterday because of Friday's nominal open, high, low, close, one tick on Good Friday, is not a legitimate green. I should probably paint that over white because it will keep popping up. I might do that. And then eliminate the dots as well. So the trend is down. We're close to oversold, and we were oversold. So we might still have a little more flat sideways trading range, but I happen to be bearish. You can't help it. Downtrend. Don't see any major bottoms developing as yet. Looking for a little bit lower levels. Next chart is OJ. Screaming bull move out of that pennant formation, which I talked about before it broke out of it. A pennant formation is a continuation formation usually, and I said that before it broke out of it. So now we're overbought, and I'm looking for a short-term downside correction in a bull market. Next chart. Same thing goes for cocoa, except there's no pennant. Next chart. Same thing goes for sugar. Very overbought. When you get into the 90s, and this is 92.5 almost today, you are highly likely. Look at what happened last time. We were around 90, 92.72, almost the exact same RSI, which is not particularly important. The fact that it's super high is important. You had about a week and a half worth of down move. There is no other example on this full year of data except current right now, boy, I'd be tempted to go short as we speak. 2441 current tick. Okay, next chart. E-mini, and we started out here. You guys have a great day. Tomorrow morning is going to be very interesting because their fundamentals will have been announced, and the market will either have that correction I'm looking for or not. Mañana.